And Mandy, why it's so crucial we have you on the show is you cover the full spectrum of mega cap tech. $4 trillion for Nvidia. What would be supporting that valuation?
Yeah, look, every data point that we have tracked this quarter has been supportive of estimates going up. The latest one being Micron talking about, how their HBM sales continue to ramp up better than expected. And when it comes to inferencing, clearly the trend of, spending more compute at the time of query, the reasoning capabilities that these models have added, especially with OpenAI O series, what that has done is really reinforce compute demand tied to inferencing. And that, to me, is what's driving this wave of, enthusiasm around NVIDIA's runway, because the $200 billion number for this year, clearly there's a line of sight, even when you take out all the China revenue, which they did, with the guide in the last quarter. And so the question is, how much will they grow next year? And right now, consensus is around $250 billion. So with sovereigns coming into play, especially Middle East, and now Jensen being in Europe, you feel like, they have line of sight to that revenue as well. And that's why, the multiple seems to be expanding here.
Okay, the stock's at just below $157 per share. I was doing the math with the team, and I think that $164 per share, or just below it, would get us to $4 trillion of market cap. Nvidia was the first chip maker to hit $1 trillion of market value, and of course it's gone well beyond that. But there are headwinds, and I think what, Mandy, would be helpful to the audience is to explain what's the threat to Nvidia. Some of it is the custom silicon that the hyperscalers are looking at. But there are other players in the market. AMD will have something to say about this monopoly that Nvidia currently holds.
Yeah, and that's why, Nvidia opening up its platform, the NVLink, now supporting other chips, was such a big move and coming in at a great time, because now they are saying you can get Broadcom gear, but we'll be able to integrate it with our NVLink. And that's where the opening up of ecosystem, I think it's a very wise move. And that helps Nvidia, because all the investment that companies are making in Nvidia stack now can support some other chips. So with that being said, look, the numbers are getting bigger and bigger. So you kind of think, yes, Nvidia is a durable monopoly, but for how long, given, all the other factors that you just described. But for right now, it feels like they clearly are executing very well on that front.
As of this video, Nvidia stock is up about 80% from its year-to-date low in early April. Wedbush remains extremely bullish on Nvidia shares because it sees the chipmaker as the cornerstone of the AI revolution. In his research note, Dan Ives reiterated that artificial intelligence, the biggest tech trend of the 21st century, is still in its early innings only. Nvidia shares have already printed a new all-time high this week, but a senior Wedbush analyst believes the momentum will only pick up speed. The analyst stated that AI is the only company in town with their chips, the new gold and oil, and reaffirmed his outperform recommendation on the stock on Friday. Wedbush's current price objective of $175 for Nvidia suggests that the company may rise by an additional 14% from its present levels. Despite its enormous surge since early April, Nvidia's stock is still appealing primarily because it provides exposure to all artificial intelligence hardware and software industries. In a recent interview with CNBC, Jordan Klein, an analyst with Mizuho, cited Nvidia as one of the three horsemen of the global semiconductor business, along with Broadcom and Taiwan Semi. Given that the NASDAQ-listed company is well-positioned for a significant improvement or acceleration in their sequential growth into the second half of 2025, Klein advised keeping with the AI stock. The rest of Wall Street is also positive about Nvidia's stock because of its pivotal role in facilitating the AI revolution. Analysts presently have a consensus strong buy rating on Nvidia shares, according to Barchart, with a mean target of about 197, suggesting a 15% potential upside from current levels. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Tell me more about, when you're an investor here, you look at the Mag 7 names, two of the names you're bullish. One of the names you're more bearish. right? And so I don't know if that's usual or unusual for folks, but you don't take them as a group. You take each one by its own name. I mean, let's start with this tech trade and Nvidia.
Yeah. Well, I mean, it's hard to really be anything other than, I think, confident in Nvidia right now. They beat on their quarterly earnings by quite a bit, actually. They just had a record high day yesterday. Their price targets by many institutions have been raised. Some has saw as high as $250 a share. And I think it's been really driven by, well, things with all the tariff uncertainty settling down. I think there is confidence that despite the concern around the sort of regulatory risk, that something will be figured out with how China is managed for them. And then, of course, their revenue's just been exploding because every one of the mega cap companies is building out their AI infrastructure. And where are they going to go anywhere other than Nvidia's hardware, of course? And so I think there really is a continued bull case for AI. And further on the value side, I really think Google's a great player here too. Of course, there's been this sort of underlying concern for them around their Blue Link search business revenue, which is, Google's claim to fame, really. But they have 230 million paid subscribers. Gemini's performance has absolutely rivaled that of ChatGPT. And now, as Sundar announced that Google I/O platform a few weeks ago, they are moving toward integrating Gemini into their services. And when it's trading at the 18 to 19 price to earning ratio that it is, when you compare that to the rest of the Mag 7, it starts to look a lot like a value buy.
Right. Okay. Well said. We had a guest on earlier who thought there was 20 to 25% upside in Nvidia in the next 6 months. So very bullish on that name as well.
According to a report sent to clients on Friday, Wedbush Securities believes that Nvidia and Microsoft will enter the $4 trillion market cap club this summer and could surpass $5 trillion in the next 18 months. According to analyst Dan Ives, both businesses are prime examples of the AI revolution and are key players in what he refers to as the largest technological shift in 25 years. He pointed out that Microsoft was valued at almost $3.7 trillion, but Nvidia regained its title as the most valuable company in the world this week, closing at $3.78 trillion. The only other firm worth more than $3 trillion is still Apple. Ives identified software, semiconductors, autonomous robots, cybersecurity, and exploding AI application cases as major growth trends. He mentioned that following artificial intelligence, robots has been named by Nvidia CEO Jensen Huang as the company's next multi-trillion-dollar potential. According to the note, for every $1 invested in Nvidia processors, the larger IT ecosystem multiplies by 8 or 10. Wedbush thinks the road to larger market caps is well supported as AI implementations pick up speed. In order to determine whether these competitors can live up to high expectations, investors will be monitoring future earnings and product releases. The popular AI sector continues to dominate headlines, and the overwhelming enthusiasm is helping many companies in the space achieve significant increases in their share. Many others think we haven't even reached the early innings of the subject, which is definitely here to stay for years to come. Leading the charge has been Nvidia, which has experienced unheard-of growth in recent years as a result of the craze. After the stock's incredible climb over the past few years, there is still a question. Is it too costly to purchase now? To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
I don't know that anybody thought we'd be making new highs in April or maybe even May.
Or Monday,
times.
when we were going to war. I mean, this has been one crazy week, and you mentioned climbing a wall of worry. My God, we're climbing it and we're scaling over it, and you said 61.47 for the all-time high, but let's look at, I'll give you three more points. Yeah. 61.44.15 is the all-time closing high.
Oh, so we just need to get above that.
Give us the closing high. So give us 61.45, and that'll be great.
That's what we did with Nvidia yesterday.
Unbelievable.
Right?
And if you want to talk about one stock that can lead this market, that's the one. It broke out above 150. I was looking for a 150 close. Now it's trading 155, 156. So when you get the biggest stock in in the world, the biggest two if you count Microsoft, making all-time new highs. That's the leadership you want to see take us to that next leg of this bull market, and I believe we're there. We've done the full roundabout. The V-bottom is now official, when we get to the end of Monday, we're at the end of the quarter, and I think we are set up perfectly to start off the third quarter and finish this year pretty strongly.
What's interesting is it's going to be tech. You think that leads us up higher and continues higher? Is it tech?
Yeah, without a doubt. So,
as previously stated, Nvidia has experienced unparalleled expansion in recent years due to the persistent demand for its data center products. With data center sales of $39.1 billion, up an incredible 73% from the $22.5 billion print in the same period previous year, the AI poster child kept up its impressive pace throughout its most recent release. The figure that follows shows the quarterly sales of Nvidia data centers. With a relatively low valuation, the stock unmistakably represents one of the best pure AI investments available. The present price of the shares is 30.1x forward 12-month earnings multiple, which is far below the 50.0x 5-year median and a small portion of the 106.3x 5-year highs. At a reasonable 1.1x, the current PG ratio is once more much below both the 5-year median and 5-year highs. Remember that in 2020 and 2021, when the AI theme was still developing and the firm was mainly recognized for its gaming GPUs, shares were well above current value levels. Another indication that everyone wants to use Nvidia's GPUs is the company's recent agreement with the Kingdom of Saudi Arabia, KSA. More precisely, in May, Humane, a division of Saudi Arabia's AI-focused public investment fund, announced a significant investment to construct AI factories in the Kingdom of Saudi Arabia. These factories are expected to have a capacity of up to 500 megawatts and will be powered by several 100,000 of Nvidia's most cutting-edge GPUs over the course of the following 5 years. Nvidia recently announced a partnership with Novo Nordisk to develop customized AI models and agents that Novo Nordisk can use for early research and clinical development, as well as to apply cutting-edge simulation and physical AI technologies, further contributing to the company's growing number of deals. Many people believe that the stock has gotten overly costly due to Nvidia's recent explosive growth. Given that the current multiples compare favorably to historical levels, the shares are actually not wealthy at all in terms of the valuation picture. With current consensus projections pointing to 42% EPS growth in its current fiscal year on 51% greater sales, the company's rapid development has kept the valuation picture in check. The ambitious growth predictions completely reflect the tremendous demand in the field, with the trend certain to continue for years as more people to get their hands on Nvidia GPUs. Additionally, analysts have continued to positively update their projections over the past few months, and the company's EPS outlook is still good overall. Given its immense size and unparalleled execution, the latter being a major factor in its incredible story, Nvidia continues to be the stock of choice for AI exposure. The truth is that it would take a very bad event to slow the stock down, even though many people wait to buy a possible dip. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.